টিবিএস মার্কেটসের এই সপ্তাহের পর্বে সবাইকে স্বাগত জানাচ্ছি। আমি মাহফুজুল্লাহ বাবু। দর্শক, আজকে আমরা কথা বলবো বিদেশি বিনিয়োগ নিয়ে। 2018 সালের দিকে দেশে ফরেন পোর্টফোলিও ইনভেস্টমেন্টের যে আকার ছিল সেটি প্রায় $3.5 বিলিয়ন মতো ছিল, এবং প্রত্যেক বছর তারা নেট সেলার হিসেবে ফান্ড উইথড্র করতে করতে এক পর্যায়ে এসে এখন এটি সামওয়্যার $1.2 বিলিয়ন মতো আছে বলে আমরা ইন্ডাস্ট্রি সূত্রে জানতে পেরেছি। তো আজকে আমাদের আমন্ত্রিত অতিথি একজন বিদেশি বিনিয়োগকারী, হংকং ভিত্তিক এশিয়া ফ্রন্টিয়ার ক্যাপিটালের ফান্ড ম্যানেজার। তিনি প্রায় 12 বছর ধরে বাংলাদেশে ইনভেস্টেড। 5 বছর পর প্রথমবারের মতো তিনি বাংলাদেশে আসলেন। আগেও এসছেন, 5 বছর পর বাংলাদেশ ভিজিট করছেন। তো আমরা আমাদের স্টুডিওতে তাকে আমন্ত্রণ জানিয়েছি। বাংলাদেশ সম্পর্কে, বাংলাদেশের বাজার সম্পর্কে তিনি কি ভাবছেন। তার ক্লিয়ার কল হচ্ছে যে বাংলাদেশের শেয়ার বাজার অবিশ্বাস্য রকমের সস্তায় কিছু শেয়ার পাওয়া যাচ্ছে, অ্যান্ড ম্যাক্রো ইকোনমিক অ্যান্ড আদার যে সমস্ত একটা স্টেবিলিটির সাইন তিনি দেখতে পাচ্ছেন, তিনি এখানে বিনিয়োগ বাড়ানোর পক্ষে। তার কল হচ্ছে মার্কেট অলরেডি বটমড আউট। মিস্টার রুচির দেসাই, ফান্ড ম্যানেজার, Asia Frontier Capital. Welcome to the show, Ruchir.
Thank you for having me. Pleasure to be here.
So, what brought you after 5 years in Bangladesh?
Well, a couple of factors. One is obviously I've not been here for quite some time. My last visit, as I mentioned to you, was in December 2019. I've been coming every year to Dhaka between 2015 to 2019. Then obviously you had some external events like the pandemic and some regulatory issues in the country and political issues in the country which prevented me from coming. But yeah, I mean, what has brought me to Bangladesh, obviously, like I mentioned, is it's been a long time. And second is, I think, over the last probably couple of months, I've noticed that valuations for the market and especially many stocks have become very attractive. I would say there's a lot of pessimism amongst investors about Bangladesh in terms of valuation perspective or the outlook for the economy or from a political perspective. But I don't fully agree with those views. I think yes, valuations are attractive and they may be discounted for a certain reason, but at the same time I feel things have bottomed out, valuations have bottomed out, and I think there are some green shoots on the economic front, especially for Bangladesh. You're seeing exports recover, you're seeing pretty strong remittance growth, you're seeing stability on the macro front, and also on the political front you're seeing relative stability compared to maybe 6 months ago. So the overall, I would say the outlook incrementally should get better for Bangladesh. And therefore, I think you could see a re-rating in many of these stock markets, in the stock prices of many of these stocks or companies, given the discounted valuations.
Okay, you have investment in so many frontier markets. What these markets are, and what's your allocation in Bangladesh right now?
Yeah, so our fund invests in Asian frontier markets and listed equities. So some of the markets we are invested in are Bangladesh, Pakistan, Sri Lanka, Vietnam, Kazakhstan, Uzbekistan, Mongolia, Iraq. Our biggest exposure right now is to Pakistan. That's about 18 to 19% because the market there has done very well in the last 12 to 18 months. Our second biggest exposure is Sri Lanka. It's about 13%. Again, we've added weight to that because we're very positive on the outlook for the economy. It has a very strong economic and political stability now. So the market's done very well there in the last 12 to 24 months, and we also added exposure. And then our third biggest weight is Vietnam at about 11 to 12%, and then Bangladesh is about number 4 or number 5, about 10% weight. That's our allocation to Bangladesh. It's remained pretty much, we've not increased or decreased it significantly. We added some weight last year because after the floor price limit there was some liquidity, there was some positive momentum in the stock prices. At least you could buy and sell shares pretty easily. So the market has not been doing well for the last 2 years. So we thought, looking at bottom of stock selection, some blue chip names were trading attractively. So we added to some positions, but more or less
after the price fall.
Exactly, after the price fall, post the floor price limit which was lifted in January 2024. So we added then, but then since then we've not really done much because you had the political events. But now post my visit, I think I'm going back with a very positive view or incrementally positive view on the economy and the country as well.
Okay, last 6-7 years, we can say that there's a foreign exodus, and that started, I think, in 2019. And in your view, what was the reason?
Yeah, I think firstly we got to take
I'm sure you have faced the same problems.
Yeah, so I think taking a step back in general is not just you've seen foreign exodus from Bangladesh. You've seen foreign exodus from many emerging markets, not just Bangladesh. You've seen it from even India over the last probably 1 or 2 years. You've seen from Vietnam, which is a very hot story, but you've seen pretty heavy foreign selling, especially last year.
They had some interim years of net positive flow.
Sure. But in general, you've seen outflows from frontier emerging markets over the last few years. I think the big reason is because the US market has done very well. So I think there are a lot of arguments if the S&P 500 is rallying by 25% or 20% a year, and markets like Vietnam are going up 7% or Bangladesh is in fact negative, then it doesn't really make a lot of sense to be invested in these emerging or frontier markets. You just focus on US because you have the comfort, you have the confidence that of your returns and of the companies and of the governance and the political stability. So that's one major reason. But I think so that's the broader picture for why you've seen exodus across many emerging and frontier markets. But for Bangladesh's case specifically, I mean, if I recollect, before the pandemic, or even before 2019, I would say, when I used to come for the conference to Dhaka, you would have many other foreign investors at the event, and they were very interested in many companies. They were quite positive on the outlook for Bangladesh because you have a large young population of 160 million people. You had GDP growth of between 6 to 7% that time. Macro was very stable, current account was under control, foreign reserves were growing quite stable, inflation was under control. So you had very stable macroeconomic fundamentals, and also companies were well run. So you were seeing inflows, especially in 8 or 9 companies which are very well run, blue chips. You were seeing foreign interest in those companies. But I think things changed probably 2020 onwards. Obviously, you had the pandemic, and you had some regulatory decisions which hurt investor confidence. So one was the stock exchange was shut for I think 1 month or so, which hurt a lot of confidence of many foreign investors because they want liquidity. They don't want to see that tomorrow the regulator just shuts the market and then for example, if a fund has to redeem if fund gets redemptions from their investors, and hypothetically if they had a very high way to Bangladesh, they would be stuck because they can't sell in Bangladesh. And so that's one. Second is, I think even during the pandemic, the floor price limit came, it went. So
twice.
Exactly, twice. Before the war, before 2022 also. So that also hurt confidence that there's lack of consistency from the regulator. It's very arbitrary. And then of course 2022, you had the floor price limit again post the war in Ukraine, which was there for almost 2 years. So obviously if you have a floor price limit for 2 years, it's not going to attract any foreign investors because they don't know what the real value of a stock price is because it's been kind of arbitrary decision making. At the same time, I think that time, besides the floor price limit, besides these arbitrary regulations, which are very unfriendly to foreign investors, I mean, I guess for all investors, not just investors, for domestic and foreign investors, you also had a Bangladesh entering a pretty tough macroeconomic environment, because of the war in Ukraine. You had high inflation, high commodity prices. That hurt your foreign exchange reserves, your exports took a hit, GDP growth took a hit.
All the problems unfolded at a time.
Yeah, but also some of the decisions were man-made, right? So if the economy was probably handled in a better way, then you would not have to go to the IMF or do, for example, many of the reforms the IMF suggested were being pushed down the road. The can was, kicked down the road in terms of subsidies or some of the other reforms that we need to do in the banking sector or some of the other sectors. But I guess because of the crisis, country had to go to the IMF. Now you have to kickstart the reforms. So you had the regulatory issues, plus you had economic issues. That just got added to 2023. Also was tough economically, and then 24 had the political event. So I think it's been a tough few years for Bangladesh. It's not just one event. It's a continuation of events, a continuation of factors over the last few years which have hurt investor confidence amongst foreign investors.
Okay, the macro numbers are stabilizing, you see.
Yes.
And the stock market already bottomed out.
In my view, yes.
Yeah, that's a good call.
I mean, if we look at, exactly. So I think if you looking at because we invest in markets like Bangladesh, Pakistan, Sri Lanka, we've seen in the especially last few years, we've had similar experiences. So for example, Sri Lanka, they also had a very tough economic situation. In fact, even tougher than Bangladesh.
They defaulted.
There was a line for fuel. There was shortage of other essentials in Sri Lanka. You never had that issue in Bangladesh, but they were in a probably even worse situation in 2022. So I also went to Sri Lanka in November 2022, just a few months after the crisis, maybe 4 or 5 months after the crisis. That time the PE ratio for the market was 4 times. So Sri Lanka, to give you put in context,
4 times
the price to earnings ratio.
Okay.
So to put things in context, pre-pandemic, Sri Lanka used to trade about 14 or 15 times P ratio. This is 4 times. So obviously it's like historical low P ratios. So that also you need some judgment, you need some conviction. So when I was there, I noticed that tourism is slightly making a bit of tourism industry is very important for Sri Lanka. So it's making a bit of a comeback. The rupee was devalued significantly. Interest rates were raised aggressively. So I had a feeling inflation has peaked out now. So 2023 you will see inflation, interest rates coming down, which will be good for the stock market, good for investor sentiment, and good for the valuation re-rating. So I kind of saw green shoots in the economy from a macro perspective, and also being on the ground, things are not as bad as people may.
So you made the bet.
Yeah, we took a call. We don't make a bet. We take a calculated call.
All right.
So we take a calculated call, a calculated risk that things have bottomed out, and we started increasing our weight to Sri Lanka beginning of 2023, and it played out well. Sri Lanka's stock market was up about 40% in 2023 and up 65% in 2024. Similarly in Pakistan. Pakistan also was in a pretty tough macroeconomic and political situation in the first half of 2000, especially most of 2022 and first half 2023. And I think by June 2023, even over there, you could look at the indicators. For example, inflation had peaked out, interest rates had peaked out when you speak to the central bank in their analyst calls. You speak to companies when I used to meet them in conferences. And valuations again there, less than the P ratio for the whole market was 3.9 times. So you can just see the Pakistan's P ratio historically was 7 to 8 times. This is halved basically in the last few years before 2023. So there also we took a calculated call that things have bottomed out. The rupee has been devalued. Interest rates have peaked out. Inflation has peaked out. We started adding some weight to Pakistan, especially towards second half 2023 and especially first half 2024. And most of the rally in Pakistan happened second half of last year, because inflation started coming down significantly, now in single digits. The central bank cut interest rates significantly because inflation has come down. So looking at these two experiences that we've had, I think Bangladesh is in a similar position to maybe Sri Lanka and Pakistan maybe 18 months ago. You have taken some of the tough measures like both countries took, raising interest rates, inflation is high, you're doing some of the IMF reforms, removing subsidies, raising electricity prices, gas prices. Politics is somewhat stabilizing, similar situation to what Sri Lanka was 18 months ago. And now, like I said, I see green shoots. For example, the Dhaka has been devalued quite significantly over the last probably 18 months. You're seeing exports recover nicely since the political events of August, and export growth for the last 3 or 4 months, especially last 3 months, has been mid-teens growth, 11 to 12% export growth. You're seeing remittances come back very strongly because of the devaluation of the Dhaka. Current account is now in surplus. So these are all the factors we look at, because it's not just about what people feel on the ground, but the actual numbers speak for themselves. Yeah. You're seeing green shoots, and the P ratio for the whole index in Bangladesh now is about 9.5, 9.6 times. It used to be, I think, 16, 17 times 5-6 years ago. So again, you see the derating. So similar to Pakistan and Sri Lanka, my view is that incrementally as things get positive, if all the positive won't happen in one shot. All the reforms or inflation nothing's going to happen in 1 or 3 months, but incremental things. So macro stabilize, exports are rising, remittances are rising, Dhaka is stable, and going forward, I think inflation has peaked out. The January number, inflation has come down to single digits. So if you take a 6 to 9 month view, I see high single digit inflation, maybe even mid single digit.
I've heard the foreign fund managers are afraid of currency devaluation, the local currency devaluation. What's your currency expectation?
Yeah, I mean, like I said, I think most of the devaluation is already here. Because Dhaka was at, I remember Dhaka being between 80 to 90 until just 18 to 20 months ago. Now it's at 122. It's almost 50%. That's a pretty significant devaluation. So I don't see a major devaluation here. One, just from, if you look at the external side, like I said, exports are strong, remittances are strong. Yes, there are some import restrictions, but you have a current account surplus. So even if there's a bit of a current account deficit, it's very normal for an emerging market economy like Bangladesh, or even most South Asian countries, which are net fuel and food importers, to have a current account deficit. It's not a crime to have a current account deficit. It's 1.5 to 2% current account deficit is completely manageable for any emerging market economy which is a net food and fuel importer. So even if you remove import restrictions in the next 12 to 18 months and current account goes slightly into deficit, that's fine. But therefore, because like I said, that's going to be very helpful. The external situation stabilize, and that will be probably stable for the Dhaka as well. So I don't see like a massive another 20% devaluation, not even 10, 11%, maybe 2, 3, 5% more. But that's, I think 5% is very normal in the long run. 3 to 5% depreciation in the currency, emerging market currency, because of interest rate.
With the inflation.
That's normal for any emerging market. I mean, even Indian currency depreciated over the last couple of years, especially last 1 year. So, as long as you have equity returns in dollar terms which are significantly high or higher than the Dhaka depreciation, then that's fine. Because and if the stock market re-rates here in Bangladesh, it will be a very strong re-rating. It won't be like a 8-10% re-rating. It will be like a 20% plus re-rating. So you're getting dollar terms.
Right. Let's talk about your portfolio stocks.
Yeah.
And the stocks you are invested in already.
Sure. So I think, like I mentioned, allocation to Bangladesh is about 10%.
You cannot cross 20% in a particular country.
Yeah, we would not like to, because we want to have more risk control, more diversification. We don't want to have 35-40% in one country and maybe we miss something on the macro or political side and things, go down from there economically.
Risk management.
Exactly. So it's not like we don't like a specific country and therefore we don't have more than 20%. But I think just from a risk management perspective, 20% thereabouts is something which you're comfortable with. Yeah. But Bangladesh is probably 10% right now. I mean, it is at 10% allocation.
There's headroom.
Yes, exactly. So there's definitely headroom. And like I said, I'm leaving the country being much more positive than when I came here, before I came here. I see green shoots for the economy, for valuations, for earnings growth, for overall stability in the country. But coming back to your question about our portfolio, so we, in general, our strategy is to focus on names or companies which we're convinced in for the long term, because we buy and hold. We don't trade, we don't buy a stock today and sell after 1 month or 3 months, or even 6 months. We buy and hold for the long term. In fact, some companies we hold in Bangladesh since inception of the fund, and some we've been holding for the last few years. So we buy and hold for the 3 to 5 year view, and therefore you want to buy names that you're convinced in. So some of our larger positions, for example, I can name them. Larger positions are Square Pharmaceuticals, Mexico Pharmaceuticals, Brak Bank, Marico Bangladesh, BAT Bangladesh. I would say these are some of our larger positions that I met some of these companies on this trip, so I just got more confidence about their outlook going forward.
Okay. If you have any watch list.
Yeah, I met about 12 to 13 to 14 companies on this trip in the last 4 or 5 days, and yeah, some companies which we've not owned before, which I met, I think could have some good potential in the banking sector. For example, Citibank, which we don't own, but I think they've done a fantastic job in improving their fundamentals. For example, the return on equity is now more than 20% compared to single digits a few years ago. That looks interesting to me, because I think you're going to see, as the election cycle plays out, as politics and economics get more stable, more confidence comes into the business and consumer sentiment, you'll see loan growth recover, or loan growth get more strong, which is good for some of the larger well-established banks like Citibank. So I think that looks interesting. And on the consumer side, again, I think because consumption has been a bit weak because of the overall macro situation, as consumer confidence improves, inflation comes down, consumption demand for consumer goods, especially consumer discretionary goods like consumer appliances, white goods, refrigerators, televisions, microwaves, etc., that should increase.
And consumer durables.
Consumer durables, exactly. So I think Walton, which is the largest consumer appliance company or consumer durables company in Bangladesh, looks interesting as well, because they've got the scale, they've got the network, they've got the brand, and they could see a recovery in their growth rates. Plus, as interest rates come down, they would have low interest costs. That should also help the profitability. So I think these two names have stood out for me in my visit so far, from the watch list perspective.
Right, and the regulatory environment you have come through in the past 5 years, 4-5 years, and now, the difference between the level of your confidence.
Yeah, it's early days. So I mean, obviously, what investors look for, it's not just foreign. In the investor community looks for both domestic and foreign is consistency. No arbitrary rule changes. So it's early days. For example, like I said, during the pandemic, the stock market was shut, and the floor price was introduced maybe twice that time. Then the floor price reintroduced again in 2022. So I think one good thing is the floor price has been removed beginning of 2024. So it's been maybe 1 year So we have to see, for example, whether this consistency continues. So I think the regulator should obviously build that confidence that they're going to be consistent in their decision making, in their regulations, in their rule making, etc. So that's one front. That's on the floor price in general, not having any arbitrary rules. But also, I think to attract more investors in the capital market, you need to have more listings. Bangladesh is a large country, 170 million people, $400 billion plus GDP. You can GDP growth rates historically were 6% plus. Maybe you can get back to that after a few years. So clearly, there's opportunity for many companies. I'm sure there are many well-known large companies which are not listed, and even some of the tech companies which are not listed, which are doing well on the tech platform place. But the regulator needs to make it easy for them to, get listed, not have arbitrary rules. So there should be
some reform initiatives.
There should be a fair market for the valuation. Because if the company feels because of the regulatory rules they can't get a fair market value, there's no point listing, because then you'll be depressing your own valuation. So and plus in general, because investor confidence has been hit so much in the last few years because of all this floor price rule, and I don't know what happens domestically, the stock manipulation rumors, etc. I think the regulator must do whatever they can to build back investor confidence. So to make a more vibrant capital market. If you have a more vibrant capital market, other parts of the industry can grow. For example, on the private side, now I'm not talking about the government-owned mutual funds or government-owned asset management companies, but private asset management companies. I was just told today the total AUM is about $120 million. That's nothing. I mean, that's nothing compared to even, India is a much larger market, so not a fair comparison, but even much smaller than say Vietnam or even Pakistan for that matter, or Sri Lanka. So that's peanuts, right, like you said. So I mean, to grow that industry, you need to build the investor confidence. You need to build confidence that you have a proper regulator regulating these asset management companies, streamline the processes of redemption or subscription, numbers are correct, and for that you need a vibrant capital market. I mean, India also, asset management industry was pretty small maybe 15-16 years ago. But that's grown exponentially, especially in the last 10-15 years, because the stock market's done well, because there's a vibrant capital market, there's a regulator people can trust, which can take right decisions, so people can invest through their savings in the stock market. So that has to happen. So the regulator should really do whatever they can to, build a vibrant capital market through reforms, through strong decision making, and building, trust in the people's, especially when people want to save in the stock market, so building that trust.
Right. If you want to add some other points that what Bangladesh needs to beat the other frontier markets you invest in.
Yeah, I mean, every country has its own strengths and weaknesses. So I don't think Bangladesh should try and reinvent the wheel. You have many strong points in your favor. Like I said, you have a large young population, 170 million people. You're the second biggest garment exporter globally. You can easily get back to 6% plus GDP growth rates by just doing simple things. Keeping it simple, strong regulatory oversight from the government, from in the regulator, in the banking sector. I think reforms need to be done as well. So I think just foreign investors overall, from a big picture view, when they want to invest in the market for the long term, they want economic stability and political stability. So for example, now Bangladesh looks interesting. Like I said, it's bottomed out, valuations are bottomed out, the economy is bottomed out. So maybe with the 12 to 18 month view, it looks interesting because you're seeing some positive catalysts, interest rates coming down, inflation coming down, maybe some positive political news in the next probably 1 year or so, and some reforms happening. But to continue that confidence going, you need to follow through with reforms, follow through with stability. It's not that after 3 years again there's some kind of macro crisis or investors lose confidence in the politics or the economics, and you have, for example, current account deficit which is going from 1% of GDP to 5% of GDP, and then again you have to devalue the currency or do some other reforms. So I think if the government can follow through from the tough lessons learned, especially in the last few years, and incrementally build a stable economy and stable policy making, I think you can easily attract many more investors because the growth is out there, the opportunity is out there. All you need is some political and economic stability with a long-term time frame, and that's exactly what has helped other markets in the region. Like for example, India. India also has many issues, but at the end of the day, if you take a 30-year view, since 1991, there's not been any macro crisis. There's not been any political crisis since very long.
Yeah.
So investors can take a long-term view. They don't have to worry about
Need for stability, for growth.
Exactly. And so no one wants Bangladesh to do 10% GDP growth. If India is doing 7, you should do 8. No, I don't think. If China is doing, if China is doing 6, you should do 7. Or India is doing 7, you should do 8%.
That should not be like a race.
Yeah, that's what I'm saying. Investors don't look for that. One is they want the top down to be stable, relatively stable. Yeah, crisis, for example, if oil prices increases, goes to $120, yeah, that's a problem for everyone, even for India or for Indonesia or Thailand or some other more stable emerging markets. Or if there's a pandemic or some kind of war in Ukraine, that affects everyone. But that's a short-term thing. But if you have a strong base, then you can overcome that crisis much faster, right? Last time you had a pandemic and a war in Ukraine, Bangladesh was, caught in a very weak position. So, after 5 years, you have some other event, you should be able to come out of it stronger.
I think Bangladesh is going through capacity building for more shock absorption capacity building phase.
That's important. You build a shock absorption capacity. Because next time a crisis strikes, you don't want investors to lose confidence again that, you have to shut the stock market or have a floor price rule, or you have to do more reforms which really hurts the value of the Dhaka, devalue Dhaka by 40-50%. So all those things is what investors look for. They have the confidence that this will not happen in the long term on a consistent basis.
Yeah.
And that's why
those days will never come back in Bangladesh.
But but I'm just saying
they should not, at least.
They should not, exactly. But that's what I'm saying. The government is in a very strong position. Whichever government, interim government, next government, the platform is set to incrementally work on those reforms to build a much stronger position. And going forward, if there's a crisis, these events don't happen again. And therefore,
we are at the almost end of the program. The producer is calling. Thank you for visiting TBS.
Thank you for having me. Really appreciate it.
Good luck for your next venture in Bangladesh.
Thank you very much. I look forward to being back in Dhaka.
দর্শক, আমরা একজন বিদেশি ফান্ড ম্যানেজারের কথা শুনছিলাম ফ্রম হংকং। তিনি বাংলাদেশের অর্থনীতি যে সমস্ত নির্দেশকগুলো আছে সেগুলো দেখে বলছেন যে একই পর্যায়ে যখন তিনি শ্রীলঙ্কায় যখন একদম চরম খারাপ অবস্থা, এরকম একটা পর্যায়ে রাজনৈতিক পট পরিবর্তনের পরে তিনি শ্রীলঙ্কা ভিজিট করেছেন, সব কিছু নিজের চোখে দেখে সেখানে বিনিয়োগ করেছেন, অ্যান্ড পরপর 2 বছর চমৎকার রিটার্ন পেয়েছেন। পাকিস্তানের কথাও বলেছেন, ভিয়েতনামে মডারেটলি তারা ইনভেস্টেড আছেন, অ্যান্ড বাংলাদেশে এখন তার পোর্টফোলিওর প্রায় 10% এর মতো অ্যালোকেশন আছে, যেটা 20% পর্যন্ত তিনি ইজিলি করতে পারেন। হি ইজ টকিং টু দ্য কোম্পানিজ অ্যানালিস্টস, যে তার কথা হচ্ছে শেয়ার বাজার বাংলাদেশে অলরেডি বটমড আউট। দ্যাট মিনস আমরা যেটাকে বলি রিভার্সাল, এটি হয়ে গেছে। শুধু রাজনৈতিক স্থিতিশীলতা জিনিসটি একটাই, তার কথা থেকে আমি বুঝতে পারলাম যে এটি আসলে দরকার। তিনি দীর্ঘমেয়াদী যে ভারত বা অন্যান্য দেশের ট্র্যাক রেকর্ড সম্পর্কেও বলছিলেন যে রাজনৈতিক স্থিতিশীলতাই হচ্ছে এখন একটা চাওয়া। আমাদের যে 8-10% বা অন্যান্য সমধর্মী ইকোনমির সাথে রেস করেই গ্রো করতে হবে তা না, বাট ইকোনমির যে বেজ, যেটা এটাকে আর দুর্বল রাখা যাবে না, যাতে যে কোনো শক আসলে সেটা শক্তভাবে অ্যাবজর্ব করতে পারে বাংলাদেশের অর্থনীতি। এই ধরনের একটা এক্সপেকটেশনই হচ্ছে একজন বিনিয়োগকারী হিসাবে তার। নিশ্চয়ই যখনই সব কিছু ফেভারেবল হয়ে যাবে, ফরেন ফান্ড ম্যানেজাররাও বাংলাদেশে যে ফান্ড তারা একসময় উইথড্র করেছিলেন, রেগুলেটরি এনভায়রনমেন্টের উপর ট্রাস্ট আসলে, ম্যাক্রো ইকোনমিক সিচুয়েশনের উপর ট্রাস্ট আসলে তারা ফিরে আসতে, আসলে কখন ফিরে আসবেন আমরা জানি না ঠিক, যে খুব বেশি সময় লাগে না, এটাই হচ্ছে। তবে পুঁজির মুক্ত প্রবাহ এক্ষেত্রে একটি গুরুত্বপূর্ণ ক্যাটালিস্ট হিসাবে কাজ করে। আমাদের প্রোগ্রামটি ভালো লাগবে লাইক করবেন, শেয়ার করবেন।